Hey traders, Raghee here, and in this recap video we're going to do a little bit of a deep dive into understanding Darvas 2.0 levels as profit targets combined with daily price movement ranges. So I'm going to try to take this slow, but this is one of those tactics, techniques, one of the tools that I use that can be deployed by anybody. It doesn't take any kind of specialized skill. It's really just done for you. It's just a matter of recognizing the levels. And this is actually a current trade we have on in silver that we took profits on today. So this is something that we bought in the 16.85 level and then at 17.05. And you're going to find that what we do for members is scale in and scale out. We notice that there are zones of entry, just like there are zones of exit. We're going to talk about the exit zone here to the profit side. So we got our buy and we're waiting for the follow through, and we got it in a hurry today. So whenever I see a candle that looks like it might be trading above its typical price movement range, I really want to quantify that as quickly as possible. So that takes me over to the movement per day for this symbol for silver. And you'll notice Wednesdays is the highest price movement range for the week. Typically, if you look back on a 90-day look back, typically Wednesdays are more volatile. So we quantify that. How much more volatile is it? 0.36 as opposed to about the 0.32 to 0.34 upper average that we see. So we do some simple arithmetic. And that means that I take the high that we saw today, which is 1762. I'm just going to show you the range today. So 17.62, and you subtract the low, and that's going to give you your average today. Low is 1698. Okay, so 16.98. And again, the whole point of this is to show what today's range was, and it was 0.64. All right, that was today's range. So I go back over here, and what do I know about this market? 3.6 is the typical price movement range, and today I got 0.64. So that's pretty dramatic. Again, looking at the high from 1762 to 1698. So right away we know, okay, this is not a typical day. We're absolutely starting to trade above normal. So whenever that happens, there's a few things. One, stick with your trading plan. I think the first thing a lot of traders do is they want to throw their profit targets out the window. So I'm going to show you two tactics to kind of keep yourself in check without seeing the market go way up and then getting, being subjected to the snap back without having some sort of target in mind. So our target was 1730, which I'm happy to take off the table. I don't know where the highest high is, and I'm calibrated to what? About 0.36, not 0.64. So the smartest thing to do is take that target off the table. And we put a spreadsheet together in the members area so you know what our entry is, when I want to focus on the buy, what the target, break even, everything, the stop. So we take that off the table. Now, some traders might say, Rog, we don't know how high a high is. So let's go ahead and use another type of tactic to, in many ways, what I call a trailing stop trade. Like I said, this is a bit of a deep dive, right? This is a little bit more advanced technique. So once we exceeded the 0.36, it makes a lot of sense to step back and say, all right, which one of these uptrends is really intact, right? Now, even before the day really got started, we already see that earlier in the day, there are certain times where this market was breaking. This is 11 o'clock. This was 7 a.m. Eastern. So this is all Eastern time. We kind of see that the 5 minute kind of lost the grip of the uptrend. So we would go to the next short-term time frame, which is the 15. Well, the 15 never lost the grip of the uptrend. So what we could do is say, look, the 5 and the 15, in this case, I think the 15 is better, has a better uptrend that I could use as sort of a trailing stop. And the higher it goes, the higher the 34 EMA on the this right here low goes. So if I were doing nothing but saying, you know what, as long as I'm trading above the 34 EMA on the low, I'll stay in the trade. Right now, your stop would basically be 1743 or 1740, which quite frankly is still 13 cents better than my 1730 profit target because my profit target was at 0.30. And here we are 13 cents better. And let's say we keep climbing. You can absolutely use that level as an alternative to the profit target, because this way, if the market snaps back, you still have a very objective level that you say, okay, this was it. This is where my safety net is, and I realize a profit, and you've basically been able to take an extra 10 to call it 13 cents off the table. An extra, and the higher this climbs, let's say we continue to punch up to higher highs through 1770. Great, just continue to focus on that 34 EMA. And even for those traders who took the 1730 off the table, you can do what? Your second profit target can be using that particular tool. That second profit target can be the 34 EMA as a trailing stop trade. It's a very effective way to have an objective level to protect yourself from the pig in the head, as I call it, that mindset is, oh, we're going to keep going up for forever, without a threshold that you say, look, when this level breaks, we take something off the table. Now, this is an example of a very nice winner that we had in silver. And this particular trade from 1705 to 1730 was worth $1,250 per contract. Each contract in silver runs $4,400. So this was a very nice return today on silver, and the trade is going to keep on going. So who knows how much more we can get off the remainder of the position. But this is the kind of tactic that I deploy. You know, entries are great, but mismanaged trades, bad trade management will cause you to give back more of your hard work, your unrealized profit, than just about anything. Good entries make for easy trades, but neglected trade management makes for a losing trader. So these are the kind of tools that I teach, and this is the kind of stuff that you'll be able to benefit from, these kind of tactics and the tools that I use to do this tomorrow. So at 7 p.m., I'm doing a free webinar, and I'm going to be covering a lot of the trends that I have my eye on for 2018. I have, and I was mentioning to some of the group that we've got a British pound trade on right now that's up about 150%. But actually today it's up over 240%, right? So these are the kind of trades that I've been talking about since the beginning of the year, even late 2017. And there's a lot of other trends that I think are just monster trends in the making. Silver and gold, two big winners for us. But the way we identify them are through things like the TOPS indicators. How do I identify the trends? What are the commodities you need to watch? So I'll be talking about all this and a lot more tomorrow at 7 p.m. So register. This way you'll get the replay when we're done. Attend live. I answer all sorts of questions, and you're going to have a really good game plan, as well as a bunch of, wait for it, free indicators that you can put to work first thing Friday morning. So well worth your time. It's going to be a great explainer to my TOPS indicators, and it's really going to give you my macro watch list for 2018. So I'll see you there.